Global stocks rose on Friday as the threat of a U.S. government shutdown receded and expectations grew that China will unveil sweeping measures to strengthen consumer demand. However, the strength of those bets lacked any major conviction, which was reflected in gold hitting a new high above $3,000 for the first time ever. China's benchmark stock index rallied the most in 2 months on Friday, with consumer shares leading gains on expectations of more policy support for the sector. Wall Street futures contracts advanced as a stopgap funding bill looked set to pass and award a U.S. government shutdown. However, a wave of selling across global stocks on Thursday snuffed out any flickering hopes of stabilization or recovery from the previous day. And that was essentially driven by various factors, to name some: the latest salvo from U.S. President Donald Trump in the global trade war, which sent investors running for cover. The resulting chaos has driven the S&P 500 into a correction. The S&P 500 dropped 1.4% on Thursday to a 6-month low, bringing its 3-week rout past 10%, a correction in trader parlance. The Nasdaq 100, also in a correction, fell about 2%. Thursday was a classic risk-off day as investors slammed stocks and riskier assets lower. Investors scampered to the traditional safe haven harbors of U.S. Treasuries, the dollar and gold, which surged to a new high just under $3,000 an ounce. A global stocks gauge fell to a fresh 6-month low and is now down nearly 8% from its high. The MSCI Asia ex-Japan index falls for a 5th straight day, its longest losing streak since November. There's a growing sense that Trump is willing to accept the economic and market damage his tariff policy is inflicting right now. Until investors can be convinced otherwise, the path of least resistance for equities and risk asset is probably to the downside. That is, even as the sell-off is getting pretty extreme.